I think it's really sad to see, especially around the loss of life. Although Ivory Coast has seen the growth rates that it has and the improvements in infrastructure, climate changes are something that it can't have any control over. Although I think going forward, if we do see an improvement in sort of water systems and that sort of thing within the capital city like Abidjan, hopefully in future we'll be able to avoid the loss of life that we've seen. But unfortunately for Ivory Coast, these are the annual rainfalls. It usually happens quite heavily during this period, so it's part and parcel of their geographical location.
Well, let's talk about these funds coming from the IMF, and we also understand the IMF seems to be very positive about Cote d'Ivoire's economy. In fact, it's talking about the fact that that country will remain robust, as well as Ethiopia, on the back of agriculture, actually, this time. But just talk us through this. Is there much more, to this optimism of the IMF, and what do you make of the funds given so far?
I think a lot of the optimism that the IMF and a lot of international investors have for Ivory Coast is really centered around the fact that its economy is a little differently structured than what we're used to. While agriculture makes up quite a bulk of the economy, around 20% of GDP is reliant on it, I think authorities for a good number of decades have tried to keep that agricultural sector as diversified as possible. For example, the type of crops they produce, it ranges anywhere between cocoa, cashew nuts, palm oil. So should something happen to one crop, they have other crops to look to. Another thing that they've tried to do is really to try and feed off the value chain of the agricultural sector. So they not only produce the crops, but there's quite a large and growing agro-processing sector that's happening in Ivory Coast right now. And you can appreciate that for a lot of Africa, we're really trying to modernize and industrialize the countries on the continent. So seeing that certain countries are able to pull that off is quite positive. Another strong feature of the agricultural sector in Ivory Coast is the fact that it is very strongly export-oriented. I mean, they are the world's biggest producers of cocoa. The fact that it is very export-oriented also means that they have a constant stream of foreign currency earnings that come into the economy. So I think for Ivory Coast, a lot of this growth that we've seen is due to the fact that for years and years, the government has really focused on building a structure and a foundation for the economy that allows it to ride the waves of volatility, and this will help this growth picture remain something that's going to be sustainable for years to come.
And I mean, from all you've said, clearly, if the floods should go the other way, the rains get worse, that really will not go well for Cote d'Ivoire's economy. How prepared is the government to tackle, this kind of situation should they come up?
So weirdly enough, this bout of rain has actually followed delayed rains in Ivory Coast. So up until a couple of weeks ago, the concern was about the lack of rain, and cocoa farmers were worried that they might be drought conditions and they wouldn't be able to produce the cocoa crop. So while the rains have come at the expense of loss of life in Abidjan, farmers, on the other hand, are a little bit hopeful that the rains will start helping the crop that has suffered from a lack of rain over the past couple of years. I think that being said, no matter how diversified the economy is at this point in time, the reality is around a quarter of Ivorians rely on the cocoa sector for their income. So, the cocoa price drop that we saw last year, or if anything happens to cocoa production this year as a result of climatic change, will have quite a strong and direct impact on the average Ivorian citizen.
Now, just walk me through this. How has the country managed to keep its interest rates low for a very long time?
I think really what's helped is they have very low inflation rates. And inflation has actually remained low for a couple of reasons. It helps that the currency, the CFA franc, is pegged to the euro. So that really limits currency volatility, and that really limits the inflationary pressures that can put on the country. I mean, we can appreciate a lot of countries, especially in the West Africa region, your big economies like the likes of Nigeria and Ghana have gone through bouts of currency depreciation over the last couple of years, and we've seen inflation there sitting in the double digits. In contrast, I think the currency peg in Ivory Coast has allowed them to maintain inflation at around the 1 to 2%. So that's quite a positive for them. Going forward, I think the government is looking at a lot of projects that will limit the country's external vulnerabilities. One of them is they're trying to become fully self-sufficient in terms of food production by 2020. What this will allow them to do is to avoid sort of the problems that will come from volatile global food prices. So while the current CFA peg is quite a big feature, I think they are trying to find avenues and ways to try and limit the external vulnerabilities that they face.
We're talking about these vulnerabilities. Let's talk about, growing government debt at the moment. Do you think this calls for concern? How is the country positioning itself for debt sustainability?
You're absolutely right. I think we've seen Ivory Coast going to the debt markets quite a few times. On the positive side, we've seen a lot of investor appetite, and this lets you know that investors view the country positively. But I think on the other end, we are quite aware that this means that the government is growing their debt levels. I think what investors should look out for is not just the growing number of debt. I think they've managed to keep that quite sustainable, but I think the type of debt that Ivory Coast is taking on is what people are looking at more and more now. Traditionally, they've taken on loans from the likes of the IMF, and these have come at very low interest rates, long repayment periods, so the cost of debt was very low for government. But I think now, with the government's push to try and improve infrastructure in the country, they've had to borrow from more non-concessional sources, which tends to be a much more expensive form of funding. So we've seen the cost of funding in their budget over the past few years climb from around 7% of the budget to around 14% of the budget. I think at this point in time, 14% is still a relatively manageable number. The IMF did come out and say that they're still at a moderate risk of debt distress. But I think going forward, any additional debt that the government does take on, they need to ensure that they plow it into investments that yield the highest return. At the same time, they need to start allowing and facilitating the private sector to start taking on a lot of this infrastructure investment. I think that'll help lower the burden on the government in terms of the investment spend. So right now, I think the debt remains sustainable, but to maintain that sustainability, I think authorities need to have a very close look at where the money is being spent.